Setting time to target, 2 minutes, 15 seconds.
2:15, that's impossible.
File attack point.
Mavericks inbound.
Welcome to Market Makers, everybody. A very important update video given the fact that the USA is now at war in the Middle East. There's peak fear in the marketplace, but I'm here to tell you, you should fade the war unless key market structure is broken. So this is an important update video, whether you trade markets or cryptos. In this video, we're covering S&P futures, NASDAQ futures, as well as Bitcoin, Solana, and Ethereum. I will have a video out covering the ETFs for members, as well as a special altcoin video for members after this video. If you guys are interested in joining membership, check out the join button on YouTube. While you're there, hit the like and subscribe button. I appreciate your support. And of course, if you want to trade the markets, check out Bitunix as well as SimpleFX. Be a Market Makers VIP right there in the video description. Let's kick this off. Nothing has changed on the charts except people's emotions. That's it. Look at the actual chart. This is the S&P, the $60 trillion market. Crypto, $2.5 trillion. Everything's timestamped below, but my crypto friends, I highly suggest you watch the macro here on the markets because this will determine the ultimate direction of crypto. We look at our uptrend. We are intact going all the way back to the April lows, right? What were those April low predictions for a target for 2025? 7,000 on the S&P. It was hit December 26th. Max bull case was 7,500. The way the market's positioned right now, you are linear, you're vacillating 250 points up and down no matter what you have thrown at the market. Political unrest in the USA, and now you have global theater war in the Middle East. And what could happen here? You can break out to the upside above 7,000, or you can break down. So let's look at the market structure, do a little bit of analysis on here. What is likely to play out? I think you're going to need a catalyst for a strong breakdown. That catalyst, when you're at war, could be anything. Could be a mass casualty event, could be an unforeseen circumstance. So it is possible. But what is the positioning right now of the actual marketplace? It is a neutral position, near-term linear market with an intermediate to a long-term uptrend. And it's certainly a long-term uptrend if you want to go back to the pandemic low, but intermediate since April of 2025 uptrend, and you are linear. Bullish is very easy. Take out 7,000, hold it as support, break out to the upside, target is 7,500. Bearish, if you want to be bearish or you think everything's collapsing, you first need to take out 6750. If you can take 6750 out, you have to come down and visit 6525. We're just going to look at this, just draw an example of how this could play out, what you could see here in the marketplace. So let's look at this. If this is the bearish case, just drawing a pathway here, where are you at? Well, if you break down into our support zone of 65.25 to 67.50, retest the high, that's a potential short opportunity. If you come down to test the low at 65.25 and you hold support, that's a potential long opportunity. And the key move will be retesting this block of candles that you have been building for months. If this retest fails, say you get an M top, all this is covered in my education, by the way, if you want to join the YouTube. If you get something like an M top, that is a short for me. But you will not have broken market structure unless you can take out that November low. You have to take out the November low of 65.25. And if you break down below it, come back up for a retest, easy short. Market structure is broken if that retest fails. That's the trajectory. Where you are right now at 68.65 is literally, 150 points away from a new all-time high. This can change after I make the video. This can change at any time. Again, there is a war going on. You could have an event that causes emotions, that causes a risk-off move. But honestly, I think the way this will resolve is you will see the markets resolve higher. I think March is going to end up being bullish, or the potential of the beginning of the breakout to the upside, because once the fear is priced in, and if things go smoothly, as smooth as they can in war, but if they go smoothly and this ends up being a short-term catalyst, you're going to see the markets resolve higher because they are positioned to do so. They are holding key market structure. That is the key point. Break that market structure, my opinion will change. But I think you ultimately will exit above 7,000, move towards 7,500 on this next leg higher. That's what I see happening. Unless you break 65.25, hold below it and break down, this is a short opportunity for me from a macro perspective, and you will be in a much larger retracement at that juncture, okay? There's trades all between here in the green box. Longs and shorts like I just highlighted to you, but your key pivots are going to be above 7,000 and below 65.50, and you cannot retake that level. That's your short. That's a long, already positioned long, because we're in an intermediate uptrend. If we look at the VIX, almost came back up to that target of 25.5 to 30. And again, we visited this target before back in October when everybody told you the market was going down by 50%, and back in November when they told you, nope, now the market's going down 50%. Okay, so you're going to get that no matter what happens in the market, but you have to see it in the charts. You can have an opinion, but the point of technicals is to understand support and resistance. You look at the NASDAQ. What do we have on the NASDAQ? Below the 50. Key level to take out here on the NASDAQ is 23.9. You're at 24.870. This would have to come down. Try to retake this area. Maybe make a double top if you were lucky. Some type of clean entry point. Break down below this area. This would be a short opportunity. NASDAQ, if we're looking long, it needs to break above 26K, hold above it, and break out to the upside. You're heading up to 28.2 at that juncture. Right now, you're mid. So if you're bearish, people are taking shorts, right? If you're bullish, could be a buying opportunity. Intermediate trend is up. You're in a linear market. Bearish bias in the linear market to the downside, but I think all this is resolving to the upside. So just be aware of your key market structure supports. Nothing has really changed, guys. And if you just draw a trend line from that low in November, connecting your low, I mean, you can see you've had variance here, ups and downs, NASDAQ being more volatile due to the nature of the tech trade, due to the nature of the AI belief system right now, the SaaS apocalypse. But this needs to break down below 23.9 for me to get bearish on the NASDAQ from a swing perspective. I think it's going to resolve higher with the S&P, assuming we don't have a massively bearish catalyst. Let's look at the cryptos. When I look at the cryptos, I want to look at the IGV, of course, because we tested that key support level of 76. We're back up at 82.5. Why is the IGV important? Covered this in the last few videos with Bren theory. Tech sector, apparently in 2026, narrowing it down to tech software. This is trading at a 0.73 correlation coefficient on a 30-day rolling average with Bitcoin. A 1-to-1 ratio is a perfect correlation. So this is a very closely correlated asset, as you can see, Bitcoin and gold, and you have IGV in hot pink, moving together, recovering together. What does this mean for dominance if you look at Bitcoin? When we look at USDT dominance here for stable coins, we need to see this breakdown. You're banging off the 382 at 7.75%. Like to see this exit below 7.611%. And of course, this would be bearish if it does this type of move, right? Bearish for the dominance, bullish for Bitcoin and the cryptos. But if it does this move where it escalates and accelerates to the upside above 8.7, that is bearish for the crypto space. If we look at Bitcoin, if we were to get a washout, where would it go? That target for our larger AB equals CD pattern is 52. We have targets all the way down to the high 40s. Doesn't look like that's on the cards right now, barring a catalyst. I've been predicting, as you guys know, Bitcoin to move up to its next target level right around 82 to 85K. That's been my prediction before the war. That's still my prediction now because nothing has changed from a market structure perspective. If we look at Bitcoin on an 8-hour chart, let's just go ahead and draw something very basic, right? Very basic drawing here. Let's just draw what we have happening here. And you're getting a little bit of a breakout as I'm recording this video. But if we look at this, connect our triangle here, connect our lows, look at our highs. There we go. Nice and symmetrical. This is the current Bitcoin trade or Bitcoin trend, right? Intermediate term downtrend, opposite of the markets. Why? Because you topped October 10th and you've been a downtrend. Linear market. When does this linear market resolve to the upside? Linear market will resolve to the upside when Bitcoin breaks out above 72K. You have to break that resistance above 72. Then you're heading to 82, 85. That's your first test. When does this resolve to the downside and continue a downtrend? You have to sweep your low. It's as simple as that. You sweep this low down here at 59K. That is bearish. Let's analyze the 8-hour candles. What do you have? Why is this a triangle? Just from a price action perspective here, you have your low, you have your automatic reaction high. You then have lower highs in trend. Lower high, as of right now, still a lower high, but you also have higher lows in trend, right? As of right now, still a higher low. This is how you get compression. Picture like a spring that you're collapsing between your two hands. You get compression. Compression resolves to the upside, simple physics, or to the downside. And as you get towards the apex of that compression, it makes a decision. As of right now, it is trying to break out, Bitcoin that is, to the upside. To have continued momentum, you need to get above 72K, okay? Continued momentum. And again, to have momentum to the downside, you need to break down through the base of the triangle, which is an ascending line here. So the base could be anywhere around 63. So you need to break down the base, take out your low. You have continued the downtrend at that point. But right now, I believe this is a coil that wants to resolve to the upside, okay? Let's look at this from a Fibonacci perspective. If we shrink this chart down, there's a target just based off fractals, 85K. The base of this block of candles will provide initial resistance that will have to be dealt with, okay? We look at this from Fibonacci. We can just click Fib retracement from the high there down to the low. 618, 83, 786 is at 89. And I think you're going to resolve somewhere up here for your first key test in the marketplace. Will it resolve back down, i.e. dead cat bounce, or are we going higher, right? Or are we going to make a major leg higher? We will know when we test this body of candles. I'm not bearish on Bitcoin unless we break down out of the triangle, take out 59K, then I'm bearish on Bitcoin, okay? If you will go review my videos, my bias has been the same unless the price structure, the market structure changes with the price action. So far, it has not, and I believe this is a bullish bias with the higher lows here, knowing that the market has had the kitchen sink thrown at it, and it still wants to move higher. And I think you're going to see that reflected in the cryptos. What did the indicators say? Because maybe the indicators don't have an opinion like Brendan does. Well, let's look at this. So we look at the RSI. Clearly, you can see it's mimicking the price action, which makes sense. Higher lows. We look at the volume delta. You can see you're in a range. You look at momentum. It's bullish. You can look at the buying volume, right? When you look at volume as waves, or selling and buying, you're right at the median line. This to me wants to break to the upside, but again, in a war footing situation, a catalyst can change that market direction very quickly. Very important from a swing perspective to break out above 72. Breaking out above the triangle, you've done that once or twice before, came right back down. You need to break out above 72 to have continued momentum. As I'm recording, you're at just about 69K, okay? So we want to watch this and see how it develops. If you look at Ethereum, same thing. There's your triangle. Here's your resistance. You got to break out above 2150, right? You have to continue the upward trend, break out above 2150. Ethereum target 2750 to the upside for that first key test. Where am I bearish on Ethereum? I'm bearish on Ethereum if this breaks down, breaks its higher low structure, as you can see, because you have the same exact thing, higher lows, lower highs in trend, right? lower highs, and you're trying to reverse this trend to the upside as we speak, but you have a higher low structure trying to resolve to the upside. If you just look at this from an unbiased lens, if you didn't know this was Ethereum and you're looking at this, you can see the wicks that are failing, right? But you're constantly testing these highs. You can see the bias since you've had the washout low of the lower high or higher lows, I should say. You can see the bias of these higher lows to try to break out. To me, this is bullish, guys. This wants to break out to the upside, just like Bitcoin, just like we're seeing the markets. But understand, when I say this is bullish, again, when you're dealing with war, something can literally change in the blink of an eye, such as a mass casualty event or something else. But to the bullish side, what if war efforts have a cessation? What if there's an agreement that's made? Major bullish catalyst, right? So you're getting bullish price action today on the cryptos, even though we had peak fear. How bad was that fear? We hit fear in the marketplace, and of course in cryptos, extreme fear, which has not changed. So let's look at one more time here. Ethereum, let's see if we can take out these wicks. Really, 2150 is the key level to break above. That's your key resistance, and your key support is 1740 to the downside, but you would see this higher low structure break as well. Look at Solana. Solana's on a pump as well. Look how Solana's been respecting your buy wick box, right? That deep demand wick right there that sent prices up. You keep testing it, you keep kissing it, kissed it here, kissed it here, kissed it here. You get an uptrend every single time. Again, this is a neutral bias and an intermediate downtrend since October. If Solana takes out 91, you are going higher. My target is low to mid 120s in Solana for that first key test. 2750 on Ethereum, 8285 on Bitcoin, low to mid 120s on Solana. Need to break above 91, hold it as support and take off. If you break your uptrend line here from your higher low structure, your low, your higher low, your higher low, as of right now, a higher low. If you break this uptrend, that's your first bearish warning. If you enter deeper into this box below 77, that is a bearish warning. But from a swing perspective, you need to take out 66. You got to take out your low to continue your downtrend or resume your downtrend. If not, again, my bias is to the upside. You will see that bias come to fruition if the cryptos can take out their key resistance levels. Just stay frosty in this environment because you can get jerked around, intraday volatility, daily volatility, especially as you have a massive geopolitical event in the background. Hope you guys enjoyed the video. Definitely follow me on X at Market Canary. Hope to see everybody in the Discord.